Good day everyone, I'm Cheng, and today I'm presenting my project on forecasting the SGD/MYR exchange rate trends using ARIMA and neural networks. This project aims to enhance prediction accuracy and better understand the behaviors influencing exchange rates. Let's get started. A little bit about myself, I'm Cheng, a student from the Bachelor of Science in Industrial Statistics program. I'm studying under the guidance of Association, Professor T.S. Dr. Suliadi Firdaus bin Sufahani. Together, we aim to tackle the complexity of forecasting exchange rates between Singapore and Malaysia. SGD/MYR exchange rates play a crucial role in the financial interactions between Singapore and Malaysia, impacting trade, investment, and financial stability. Exchange rates often show high volatility, influenced by factors like inflation, interest rates, and global uncertainty. Traditionally, methods like ARIMA have been used for linear patterns, but newer AI techniques, especially LSTM, hold promise for capturing nonlinear, long-term dependencies. Fluctuations in the SGD/MYR exchange rate affect purchasing power, trade competitiveness, and investment decisions. Businesses struggle with cost planning and financial risk management due to this volatility. Traditional models like ARIMA handle linear patterns, but they may fall short in capturing complex, nonlinear behaviors, creating a need for more reliable forecasting methods, which this study addresses. The main objectives of this study are to apply both ARIMA and LSTM methods to forecast the SGD/MYR exchange rate trends, compare their forecasting accuracy using various datasets, and identify the model that best predicts future trends using metrics like RMSE, MAE, and MAPE. We used two main forecasting approaches, ARIMA and LSTM. ARIMA is a statistical time series model that captures linear patterns, requiring stationary data, and is simple to interpret. On the other hand, LSTM is a deep learning model for sequential data, capable of capturing complex, nonlinear dependencies, which is especially useful in volatile markets like currency exchange. Let's compare the features of both models. ARIMA, being a traditional statistical model, works with linear patterns and short-term dependencies, while LSTM, a modern AI neural network, can capture nonlinear behaviors and long-term dependencies. Although LSTM requires more data and training time, it offers better adaptability to market fluctuations compared to ARIMA. Monthly SGD/MYR exchange rate data was collected and split into training and testing sets. The model performance is then evaluated using accuracy metrics such as RMSE, MAE, and MAPE. Rate data from January 2015 to December 2024, with a total of 120 observations sourced from investing.com. The data was pre-processed, which included date format standardization, missing value checks, and splitting it into 80% for training and 20% for testing. For ARIMA, the process began with preliminary analysis and stationarity testing. Then, we used differencing to remove trends and identified the model parameters using ACF and PCF. The model was selected based on AIC/BIC, and forecasts were generated after diagnostic checks using residuals and the Ljung box test. LSTM works differently. It takes sequential exchange rate data as input and stores long-term patterns in its memory cells. Information flow is regulated through gates, including forget, input, and output gates. This structure allows LSTM to capture complex market behaviors and long-term dependencies. We evaluated model performance using three key metrics: MAE, mean absolute error, RMSE, root mean squared error, and MAPE, mean absolute percentage error. Both ARIMA and LSTM successfully generate valid forecasting models. ARIMA performs well for short-term linear trends, while LSTM captures nonlinear and long-term dependencies. LSTM is expected to outperform ARIMA, providing lower error values and more adaptable forecasts to market fluctuations. This study provides a direct comparison between a traditional statistical model, ARIMA, and a modern AI model, LSTM, in forecasting the SGD/MYR exchange rate. It uses 10 years of data, capturing post-pandemic volatility, and evaluates performance using multiple metrics, making it unique in the ASEAN regional exchange rate analysis. This project benefits businesses by enhancing currency risk management, investors by improving their ability to evaluate currency risks, and society by promoting informed financial decision-making. It supports economic stability and improves pricing and budgeting decisions for cross-border trade. The project has significant commercialization potential, including developing a forecasting dashboard or mobile app. Subscription-based services could be offered to SMEs, traders, and investors. There's also potential integration with fintech platforms, trading systems, and risk management software. Our work has led to the development of several proprietary algorithms, all of which are granted copyright protection. We have also established a memorandum of agreement with the Universiti Tun Hussein on Malaysia, UTHM, and Brilliant Inspire Solution. Our industrial collaborators include SQI Consultancy from Malaysia and Indonesia, and Acube Global Pte Ltd from Singapore. To conclude, our project aims to bridge the gap between traditional statistical models and AI-based solutions in forecasting SGD/MYR exchange rates. Thank you for your attention, and I look forward to your feedback and any questions.